Hello, today is January 14th, 2021, and we're going to talk about Wall Street Bet's favorite stock, GameStop, GME. The stock at one point yesterday, as you can see here on this chart, was up 90% intraday. I believe it closed up 57%, so it went from around 20 bucks a share up to 1.3880, I believe was the high, and then it drifted down just a little bit to close only at up 50%. And the crazy thing about this is a lot of people are talking about short squeeze and the like, but the amount of options traded in this was really just crazy. And you can read this at our blog. You go to SpotGamma.com and then click on the blog link up here. But yesterday, if you just read this, there was 589,000 calls traded yesterday. 375K of those traded on the 115 expiration. So yesterday was Wednesday the 13th. People were trading very short-term call options yesterday. And what was crazy about that is you can see here on the 115 the 40 strike to start the day was the highest strike available, right? Because the stock opened the day around 20 or was $20 last night. So the only available strikes went up to 40, and people traded 93,000 40 strike calls yesterday. And as this thing drove higher, you can see it faded right around 38.80, I believe was the high. And what's fascinating about that is if you look at open interest today, there's only open interest for Friday's 115 40 strike of 27,000. So it traded 93,000 calls, but only 27,000 of those exist in open interest right now. It shows you that there's just a ton of day trading intraday activity. And if you compare all the other strikes for 115, you get a similar picture. Now, if you look at, this is an interesting site, Swaggy Stocks. They claim to have this AI that analyzes all the Reddit comments, particularly Wall Street Bets, and they forecast, how important or how much, activity is around the stock. And you can see with GameStop, they infer that there's a lot of bullish comments about GameStop. Clearly, there's just a lot of chatter about it, and this is a major retail stock. So we can assume then therein that a lot of these long calls that we're talking about here were, a lot of these calls were long calls, right? Because there's clearly a lot of retail sentiment. If you use Wall Street Bets as sort of a retail barometer, retail sentiment driving this thing higher. And so if you flip over to what the net of that OI is, you can use our Equity Hub tool and get a feeling for where the open interest sits. And again, pre-market, the stock right now is looking at $38 again. And they've increased the highest open interest, they've increased the highest strike to 55. So knowing that, that opens up another 15 handles for the stock, if traders really want to start piling into the 115 calls again, they could really kind of push this thing higher. I think part of the reason it stalled at 40 yesterday is because the people ran out of option strikes, and as soon as you lose that momentum, people can sell that 40 call, people can short off that, you can do some other things. And so now that the highest strike is 55 for Friday, that could open the thing up to shift a little bit higher. But what's interesting about this in our Equity Hub chart is that you can see that the key gamma strike, so what we're talking about is where the most gamma is in the name. So this is telling you where the largest area of put and calls are concentrated. It's at the 30 strike, which is again $8 below, and you can see it here. The stock's going to open somewhere up in here, which, as far as our data shows, it's kind of a no man's land for the stock. 68% of gamma expires tomorrow, which is telling you that there's a ton of options. Most of the options in the name are expiring on Friday, and then this is the other key one: 57% of deltas. And if you look at what the key delta strike is, it's 20. So what is that telling you? That's telling you that there are a ton of in-the-money calls at the 20 strike, the bulk of which are expiring on Friday's close. And so if you think about how dealers may have to hedge this stock, right? They're short 20 strike calls, which means they need to be long stock and buying stock. So what happens on expiration on Friday at the close? Well, they don't need that stock anymore, right? And they can start to unwind that hedge. And the other thing to note here is that if the stock stalls out at all over the next 2 days, any calls that are out of the money, right? Anything that's going to be, greater than say 40, certainly at the open, is going to become a weight on the stock, because those calls are going to very rapidly decay. And as those rapidly decay, those calls are, that infers that calls are losing value, which means that dealers can unwind their long stock hedge. And so for the stock to keep up at this point, even though it's gonna pre-open looking around 38, for the stock to keep up, it needs more call volume, and that call volume can't stop. It's kind of like a shark. If the shark stops swimming, it sinks. And so we think that, you know, it's likely that this thing is going to decompress into options expiration and post options expiration. And the one caveat to that is if we get another day of 500,000, you know, calls piling in, well, that could push the thing higher again. But it's really a matter of those calls keeping the momentum in the name and keeping the momentum in the stock. The other thing that's interesting to note here is that because you see a red color here, this red color infers that the name is actually in control of puts. And what we mean by that is put gamma is higher than call gamma. So there are a lot of people, and you can see the top put OI is actually 24, which is higher than the top call OI of 20. So this is telling you that there are a lot of puts at the 24 strike, and that is making put gamma actually higher than call gamma, which is a pretty fascinating thing, given again how high the stock went yesterday. It's clear that a lot of people did come in and try to short this, right? And they kept those positions on, whereas the call buyers yesterday, there were so many calls, it appears those call buyers were likely just day traders that kind of pushed the thing up. So it's a very interesting dynamic. If you check into implied volatility, you can see that what we do here is we measure implied volatility over the past year. So we actually read at the close all the implied volatility for any option that is a 25 delta option. So it's a 25 delta call or 25 delta put. And you can see that typically implied vol spikes when the stock kind of crashes. So this is this high implied vol here is around the COVID crash, right? And then there's a couple other spikes that have a bit more to do with the stock driving higher, right, as opposed to crashing. So if you look at implied vol yesterday, it spiked along with call buying. So this is kind of telling you that the stock is essentially crashing higher in a way, right? Because usually implied vol spikes like this when the stock crashes, but in this case, implied vol is spiking, as you can see in December when it last rallied big. Implied vol spiking with the stock going higher is the same mechanics as a typical crash, just that this stock is literally crashing up. And obviously 90% is, you know, just an amazing move. So calls here are very expensive because implied vol is so expensive, and the stocks had just a 90% move, and there's nothing to justify that change, obviously, in all of its fundamental metrics. You know, the stock, if you look at the news, has obviously a lot of problems, right? And that doesn't mean it needs to be insolvent, but is it worth 2x today? Is it worth 2x more than it was yesterday? Likely not. So call buyers now also have the issue of very high implied volatility that they face. So we think the stock, for these reasons, again, the expiration tomorrow with the high concentration, the 90% move, the high implied volatility, we think that probably means the stock is due for a pretty good reversal over the next few days.